Are you curious to learn about the growth opportunities and sustainability highlights in alternative investments? Come join us in hearing from investment experts across the field, ranging from growth equity to real estate, forestry, and beyond. Stay tuned. In this episode, we will talk about the market outlook for growth equity investments. Together with me, I have Riku Asikainen, managing partner of Evli Growth Partners, Evli's growth equity fund. Riku has a long-standing background as a serial entrepreneur and as angel investor before joining Evli. So great to have you here, Riku.
Excellent to be here.
So growth equity has been showing stellar performance over the past 10 years, and one may even argue that it has been the most profitable alternative asset class. So what would you say are the reasons behind this?
Yes, first of all, I think that it might be some kind of a surprise to some of the people following this show that the growth equity has actually for quite a long time has been the best yielding asset class. But the reason behind it, to me, is quite simple. That it's about the companies. The companies that we invest, they have performed extraordinarily well. It's maybe not the only explanation. I think that the part of it is obviously related to the interest rate change, namely interest rates going down. Now it has changed. And then just fund flows that since it started to yield very well, then it usually happens that then you start to gain momentum and that continues. And it looks very good for also for the outlook for the future as well.
Yeah. And looking at the market turbulence that we've been experiencing this year, how has it affected growth equity and how do you see the future outlook now?
Yes, so obviously we are not walking on air. So if there is a big change in listed market, that affects on the valuations of non-listed, that's clear that there is no argument on that. So if we have 30% movement in Nasdaq, then there must be a similar or even greater movement on valuations of non-listed growth companies. But then when I'm looking at it from the kind of owner's point of view, from the company level, that when we are looking at the companies on day-to-day operations, they are doing as they did before or even better. Especially now, of course, the after 6-9 months, the more focus has been given to cash flow kind of positive operations, or at least towards cash flow positiveness. Yeah. So those are the biggest changes, I would say. So companies on company level are doing as well as they did before, give or take, and the valuations are down.
Yeah. And then talking about the investor's role, how would you describe the investor's role as an active owner and supporting the portfolio companies, be it startups, scale-ups, in their growth journey?
Yes, so that's the exciting part of this work really for me. That, like you said, I'm an entrepreneur by trade, and now I have this great opportunity to work with world's best growth companies as a part owner of their businesses. So I feel that I'm an entrepreneur in these companies, even though that our ownership is probably 10%. So that's super exciting to me, and I think that it also shows to our portfolio companies that they also appreciate that part of the fund, that we take this active ownership role.
Yeah. And switching gears a little bit, talking about sustainability, what kind of an effect or impact do you see growth equity investments potentially having now and in the future?
I think that the sustainability goes very well with our original ideology of being owners. There cannot be ownership without responsibility. The ownership of a company, ownership of a house, or ownership of a field, it is a responsibility that has kind of both negative and positive outcomes, and as an owner you need to recognize that. And I think that that's one of the, again, super exciting parts of our work, that we are able to take that, both the kind of the responsibility and kind of show our view for the companies, that how we are viewing their future and where should they go.
Yeah. And what would you say are some concrete ways to integrate sustainability into the investment process?
So there are many concrete ways, and then obviously we start, and it's a quite long journey when you're talking about the whole, we are owners with these companies typically, years. So prior to investment, it's about shareholders agreement. How do we share the work in sustainability? Then it's about KPIs. What KPIs do we follow? What KPIs do we need to report? What KPIs are meaningful for the company? And then finally, at the exit level, then it's about sustainability, due diligence type of things that we are able to show that these are the things that this company has done historically, and this is where it is at now, and then those are very valuable things. And I also feel that it's not only about being altruistic, doing great things for the world, which is super important for us, but it's also good for the business.
Yeah. So it seems that there are various different steps that you can do in order to integrate sustainability throughout the investment process, and it really comes to the ownership that you were talking about through the active board work with the companies that you're able to then have impact and pursue sustainability within the companies.
Exactly, and like you said, in half of our companies we are the chairperson.
Yeah.
So it's obvious that we need to then take role on the guidance of the company.
Exactly.
And we are happy to do that.
Very good. Thank you so much, Riku, for the great discussion. This is all for our part today. However, we will be back soon, next time talking about investing in real estate. So stay tuned. This is Evli.